Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is HIlliard Macbeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager in Edmonton. His website, macbethgroup.com. Welcome back to the show, HIlliard.
Nice to be on the show.
The Bank of Canada kept its trend-setting rate at 1.25%, but does that prevent other interest rates, including mortgages, from going up anyway?
You know, it doesn't. It's the Bank of Canada and central banks all over the world, actually, the more recent research is showing that they actually tend to follow rather than lead. And in this case, I think they're a little bit worried about leading, but rates have been rising for a while now, so they're actually in danger of falling behind. So they're following, and they're falling behind further, and it's really more important what happens in the U.S. and the rates have been rising there. The most forecasts indicate that the Federal Reserve will raise rates 3 or 4 times this year, and they've got a new Federal Reserve chairman, Powell, and he wants to prove that he's tough, so he'll raise rates. They'll probably overdo it, and but we're in the stage of the cycle now where rates generally will go up. The central banks will raise rates until the next recession starts. But one of the interesting things although they didn't raise rates, they always accompany that with some forecasts and some comments, and they commented on the fact that household mortgage debt has been slowing and actually isn't growing much at all anymore. So in their mind, that was a reason not to raise rates.
You were saying, too, that mortgage debt for the first time didn't go up at all?
Well, so what they say is household credit growth has decelerated for 3 months in a row. So, you know, but you can actually show that now the total mortgage debt outstanding is about $1.5 trillion. And then there's another $600 billion in auto loans, credit cards, and that sort of thing. So, but the total overall didn't go up, and the mortgage debt actually stayed right around $1.5 trillion month over month. Now, year over year, it's still up about 5%, but just in the recent months, it's slowed. And that could be the rules. They made some changes in the rules, more stringent stress test. Could be that the borrowers just got debt fatigue. They just can't take on any more debt. But whatever it is, it's significant because the biggest driver, you know, people talk about the oil sands, and they talk about exports, and they talk about tariffs, and they talk about manufacturing and all that stuff, but really the biggest push behind the economy for more than a decade now has been the consumer, the Canadian household consumer, going deeper in debt, usually to buy real estate, but also to buy, you know, a new car or whatever. And if that has changed, and it appears that it might have, then we're looking at slower economic growth in the near future.
Do governments take in real estate when they do all of their economic numbers?
You know, they don't measure it directly. Like they measure new home construction. They measure renovations. They measure commissions that people earn on the realtors. But they don't directly look at what in terms of GDP growth of people just swapping money for properties. But, you know, it has a big impact because where it shows up is in the growth of the debt outstanding. So if people start, you know, just imagine for a minute that everybody decided, you know what, we're so deeply in debt as a family, we got to have a family meeting, we're going to sit down and we're going to decide, you know, we're going to skip all restaurant meals, we're not going to buy any new houses, not buy any new cars, and we're just going to pay down our debt. Well, when you pay that debt down, say you're talking about a bank, for example, if you put more money into the bank than you take out of the bank in new loans, it actually shrinks the total amount of money circulating in the economy, and that that can be very, very stressful for a lot of businesses. A lot of businesses are basically dependent on people living on credit, and it isn't just, and this is the hard part. It isn't just that they keep living on credit, but they actually have to keep living on more credit every year. And so even if they just decide, okay, we're not going to pay down our debt, but we're just not going to go any deeper into debt, then that would have a big negative impact on economic growth, and it could even lead to a recession.
So the fact that you plan to be responsible with your spending could be bad for everybody. Yeah.
So John Maynard Keynes in 1936 wrote about this, and he called it the paradox of thrift. And what happens is, if everybody gets thrifty overnight, which is he was writing during the Great Depression, so he was thinking about this a lot. If everybody decides that they just have to get out of debt and they start paying back debt, they're just pulling money out of the economy. It doesn't add anything to the demand in the economy, and actually collectively they can't get out of debt, because what happens is the economy slows down so much, goes into a recession or even a depression, and a whole bunch of people go bankrupt, and they never get out of debt. So they get out of debt, I guess, but not in the way of paying down the debt. They get out of debt by going bankrupt, and then that's a whole nother. There's a whole bunch of stuff on debt deflation theory, and by conventional economics since the Second World War has pretty much ignored debt, and the growth of debt and the growth of credit, and I'm afraid that we're going to learn that you can't ignore it, because it's the number one factor in keeping our economy going. So now there is another source of new money besides people borrowing more money in the economy, and that is the government. So the government can take in $1 trillion in revenue, and it can spend $1.2 trillion in revenue in expenditure, and then they're adding $200 billion a year to the economy, so that's what the government would have to do. If everybody decided tomorrow they're all going to pay down their debt, nobody's going to take out any new loans, the government would be forced to step in and spend more money, and then you'll get into a whole other discussion about the government getting deeper into debt.
Well, of course, now people are asking about the deficit during so-called good economic times. What's going to happen when the economy has a downturn, and that's inevitable?
It's inevitable that there'll be another recession. In fact, it's one of the longest stretches without a recession. It's coming up. In fact, in March the 9th, it'll be the nine-year anniversary of the low in the stock market, and pretty close to the same anniversary as the end of the recession in 2009. I think it was a few months later. And that's one of the longest stretches ever. So I've been doing what I do for 40 years, and I went back and checked, and there's been 8 major crises that I could identify. There's been a whole bunch of minor ones too, but just the major crises. There's been 8 in 40 years, and that's obviously one every 5 years. So for us to go 9 years without anything much, really, it's been a pretty straight run for 9 years. Is very unusual. It's almost double the average. And normally you get a recession, you get a stock market crash, you get some other crises, financial crises happening more frequently. So we've had a long run, and the problem with that is, unfortunately, people get more and more complacent, and they lose their fear of going deeper into debt. So that's one nice thing about recession. Recessions are awful, but they do have one positive thing they do, and that is they convince people to be more conservative and more cautious in their financial choices, which is a good thing.
We'll have more with HIlliard Macbeth right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're speaking with HIlliard Macbeth. HIlliard, Albertans are upset with British Columbia because of their opposition to the Kinder Morgan pipeline from Edmonton out to the ocean near the Vancouver area. But apparently there's another BC irritant for Albertans. Can you maybe explain?
Well, the Albertans are irate. Some Albertans, not every Albertan, but some Albertans, and there's quite a few of them, have been buying real estate in BC for years. And I've been talking to clients and people about this for decades. And what they do is they buy the property in Victoria or Kelowna or whatever, and they visit it a couple of times a year. But basically, it's kind of like it's there for when they retire, and then often they don't end up retiring as soon as they thought they were going to. But they enjoy the property in the summer months, and the rest of the year it sits empty. Well, the new speculation tax, as it's called, is going to cost them. The initial this year is going to be 0.5%, but next year it's jumping to 2%. So if you got that $500,000 property in Kelowna, you're looking at $10,000 a year starting next year, just for it to sit empty. And people are up in arms about this because they're saying, well, that's my retirement dream. That's my store of value, and it's going to be taxed. So now it does affect other people as well as Albertans. Obviously, it affects people from other countries like China and stuff, and I don't even think that the BC government was thinking about Albertans when they did it. I'd be surprised if they were, but it's caught a wide web. So it isn't. It's Victoria, Vancouver, Fraser Valley,
Nanaimo.
Nanaimo, yes, Nanaimo, and the Kelowna districts. I don't know if that includes Vernon or not. They haven't actually set the final rules yet, so we'll find out more. But it seems like the Gulf Islands and those areas are excluded. And then there's also an Invermere Valley, which is very close to Calgary, which it's all Calgary people that own there. That doesn't seem to be on the list either. So we don't know what the final rules are. But boy, I've been asked to do several interviews on Alberta media because people are irate about this. And now, hopefully, when the final rules come out, there'll be more information. Maybe it won't be as bad. But at the moment, it looks like it could be something that could cause Albertans who are not using the property much at all to sell rather than sit and pay. So this would be on top of property taxes. Now there is a way. There's two ways around it. As it's proposed anyway. One is if you rent it out on a long-term basis. So that means obviously you couldn't use it in the summer because it would be rented to. There'd be a tenant in there, and the other way is if you pay a significant amount of BC income tax. So say you had some business in BC and you're paying income tax, then they'll offset it against that. But other than that, you got to pay the tax or you got to sell. Those are the two options.
Yes. So short-term rentals out of the question.
Short-term rentals, you can't. You could use it to earn money to pay the tax, but you'd still have to pay the tax. So I think that's quite common. I think people own these properties, they rent them out, and then they save some time for themselves to have their annual holiday or something like that. But then that would be considered taxable. The ownership of that property would be considered taxable. So they haven't defined what long-term rental is, but I'm just guessing it's probably 1 year or minimum kind of thing, and with a lease or something like that. So maybe they'll either sell them or turn them all into Airbnbs. I don't know which.
We'll have more with HIlliard Macbeth right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with HIlliard Macbeth. HIlliard, The RCMP in Toronto have arrested 4 people for what they call a sophisticated mortgage fraud. Do you know anything about that?
I don't really. I read the report like everybody else. It's a symptom, I think, and it's probably the tip of the iceberg in terms of when you get housing prices rising as fast as they were now. It looks like they're not. It looks like they're falling now in Toronto, but up until last April, up until a year ago, they were the last couple of years before that. 2016, 2017, they'd been rising at an annual rate of 20%. And there's just so much temptation that people find a way to borrow money or to fake documents. Or now this actually turns out this was actually a little bit beyond just the normal, faking your income in order to qualify for a loan. This was out and out fraud on sounds like a very expensive properties. But there's been, now this is the third major incident of fraud. So the first was Home Capital a couple of years ago. They discovered that the mortgage brokers were faking something, and they never really fully explained what it was, but there was some problem with probably people overstating their incomes to qualify for mortgages. Then more recently, just in the last couple of months, Laurentian Bank, one of the smaller banks, was forced to repurchase some mortgages that they had sold to investors because they found out that there was some fraud in the qualification for the mortgages. And then this one with RCMP is probably more serious in the sense that these people were basically executing a real sophisticated scam on some lenders. So when I was in Toronto about 2 or 3 years ago, I talked to a lawyer he said their law firm was getting phone calls almost every day of people that wanted to lend money out at, the high interest rates, 10, 11, 12%. So with people, for real estate, and with people that eager to lend money, there's going to be some people out there that are going to figure out a way to scam them. So I suspect that we're going to hear a lot more about this because when you get real estate that hot and you get prices rising that quickly, people stop checking. I remember in 1990, a very big company, which was mostly real estate, called Olympia New York, went into bankruptcy, and it came out during the bankruptcy that several of the large Canadian banks had lent them money without even seeing the books. The family that owned the company refused to open up their books to the banks, and only one bank refused. I think it was the Bank of Montreal that refused, and the other ones all lent the money. And this was a company that was borrowing billions of dollars, so I guess they thought it was safe, but when you get hot markets, you get people making short-term decisions with limited information because there's the urgency to move quickly. And then when things slow down, and especially if prices start going down a little bit as they are in Toronto now, all of the stuff starts to come out. As Warren Buffett says, when the tide goes out, it's only when the tide goes out that you see who's swimming naked. And this is one of those times I think we're going to see.
Well, he obviously saw who was swimming naked because he became a major player in Home Capital.
That was the strangest deal. I still can't get over that. That's been quite a long time now, coming up to a year now. And I was just shocked that he did that, or his organization did that. I don't know if he actually did. He's 86 years old now, but somebody in that organization thought that was a good idea, and who knows why. But he made sure he's protected. So he's got more than double collateral. So if he's got, I think it's a $2 billion line of credit, but he's got $4 billion worth of mortgages that are assigned to that loan. So if they can't make their payments for some reason, he can seize those $4 billion worth of mortgages. And as long as they're worth at least 50 cents on the dollar, he'll be okay. So I wouldn't be worried for him, but it was just out of character. He's writes this wonderful shareholders letter every year, and I've read almost, I think I might have read most of them, if not all of them. And he said, something, he calls it cigar butt investing. He says, when I first got into investing, I started looking for really cheap properties where you like picking up a cigar butt that's half smoked off the pavement. He said, but I stopped doing that because they were always more trouble than they're worth. So for him at the age of 86 now to go back into essentially what is a pretty small deal for him, it was a real surprise, and it's also a risk to the reputation because you don't know if there's been fraud at an organization. revealed, the chances are then several of the senior executives were barred from serving as on company boards or directorships. Then obviously there's probably more that's going to come out as time goes on. So I don't know why he succumbed to that. Maybe it was just plain greed. Maybe you get to be the richest guy in the world by being greedy. I don't know.
Well, George Soros is now richest. I think he's fallen to second or third place.
You mean Jeff Bezos?
Jeff Bezos is now number one.
Yeah. I think Warren Buffett actually has dropped to third place. Exactly. Jeff Bezos is over $100 billion now on Amazon, and that's a phenomenal story. I wish we'd bought that stock. We didn't. It's always been really expensive, and we assess our purchases on a more of a value-based approach. But obviously, when something's disrupting a whole industry like the retail sales industry, it's going to be expensive, and it probably will stay expensive for a long time. But he's been phenomenally successful. There's absolutely no question about that.
The BC NDP government has canceled the first-time homebuyer interest-free loan program. Was that a good decision?
I think so. I never liked it. That was another one of those things like the Buffett bailout of Home Capital that just surprised me when it came out. It's just like, what are they doing? What are they thinking? All they're doing is helping young people get deeper into debt. But luckily for those people that would have gotten seduced by that government program, apparently only 3,000 people took advantage of it, because all they're doing is just adding to their debt pile. So the big issue for the next several years is going to be, how do people manage to get out of debt without triggering that crisis that happened like in the 1930s, where everybody tries to get out of debt at the same time, and not everybody can fit through the doorway. So there's got to be a way to manage it. I think the government will have to help, and there obviously will be some people that just can't handle their debt loads. And the rest of us are just going to have to, pay back the loans slowly, month by month, $100 extra each month, and hope it all works out.
Or perhaps hope you win the Newfoundland lottery, $1 a day for 1,000,000 days.
I met $1 a day. I met one of the top bankruptcy people in Ontario, and he told me that, he said one of the biggest questions people ask, the two big questions they ask when they realize they have to go into bankruptcy or a consumer proposal is, do I get to keep my house? And then the second question is, if I win the lottery, do I have to give up the winnings? So, anyway, that's the financial plan apparently for a number of people. Is
something like 14% of Canadians have winning the lottery as their retirement plan.
Maybe it's a good one. I don't know. For somebody, it's going to be a good one, right? For the rest of us, it's not going to be so good.
Well, the same percentage also believe Elvis is still alive.
Yeah.
Hilliard, thank you so much for chatting with us.
Nice talking to you.
My guest has been HIlliard Macbeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.